Let's move to the next currency pair, to the British pound versus the US dollar currency pair. And the first look will be surely on the weekly chart. There were 2 weeks of gains for the for the British currency. I'm sorry. One weekly candle, which was not the last week but the week before, was an engulfing pattern, which allowed the British pound to continue growing and reach levels around 1.2670. There were some pretty good data released in the UK. It became known, for example, that British preliminary GDP for the fourth quarter posted a strong gain of 0.6%. And it seems that Brexit hasn't done much to the UK economy yet. So more or less, British pound is feeling okay. Still, we can see that the pair didn't close at its highest point last week, and it retreated to the downside and closed in the area of 1.2550. And this creates some doubts about this rally of the British pound. Let's have a look at the daily chart. Here, the pair managed to break above resistance line, which connected highs of September and highs of December. The pair is trading above 100-day moving average, the green line, and above 50-day moving average, this is the brown line. Also, we are above the daily Shimoku cloud. Still, here the pair has to stay above this moving average in order to retain ability to get higher. If we have a look at the 4-hour chart, we would notice that the pair dipped below 2-week support line, and this decline means that the pair can actually test lower levels. However, until the pound is trading above 1.2430, 1.2415 area, these are the highs of January 5, 6, maybe better on the daily chart. The area of 1.2430, 1.2415, yeah, here it is. Highs of January 5th, 6th, 17th, and 18th. This is the support area. The pound will retain ability to visit 1.2775 and get higher. Below 1.2430, the decline will open the way down to the levels like 1.23. Let's have it marked on the chart. There it is, 1.23. And here I also have the weekly pivot levels. The pair is trading just below the weekly pivot level at 1.2530, and if the pound doesn't return higher, then we'll get to 1.2430, the level I was talking about right now, the maximums of the previous levels. 1.2388, and next levels will be 1.23 and 1.2271. 1.2227, I'm sorry. This will be our downside targets. So the main level, once again, and let's have it in bold, is 1.2430. If we look at the daily chart, someone may take this movement of the British pound, this as an attempt to form an inverse head and shoulders pattern. In my opinion, it still doesn't look very regular. It is more like a congestion of candles, so we can't be sure about that. But still, the reminiscence of the neckline in the area of 1.2430, 1.2415 is what should make the British pound supported and show us the next big step, big swing of the British currency. So as we already said when we were talking about the economic calendar, there will be a lot of data releases, a lot of PMIs, which will affect the British pound this week. There will be a speech of the Bank of England's Governor Mark Carney, and it will be about his speech whether to discourage the British pound or to encourage it. I think that the risks are for the British pound to the downside still, as uncertainty about the Britain's future still remains, and it is the weaker pound which is helping the British economy to produce such good results. And unless the British pound remains lower, remains below resistance in the area of 1.2670, 1.2690, then the British economic data will become worse, and I think the Bank of England doesn't want that. So our main scenario is the British pound will try to test 1.2430, 1.2415 area, and probably get lower to 1.23. But if the Bank of England sounds encouraging, if the data from the UK are fine, then the pair will recoil up from 1.2430 and will aim to this high of November 11th at 1.2673 and 1.2690. This is the first weekly resistance level according to the pivot points calculation. So this is our picture for the British pound.